Welcome back to Daily Dollar, where we give you daily finance dosage. In episode 1, we talked about what ESG sentiment investing is and why it matters. But now, let's get practical. How do you actually use this strategy? What tools are out there and how can you start applying them to make smarter, values-driven investment decisions? First things first, let's keep it simple. Think of this as a three-part process. Step 1, gather the data. Step 2, analyze the sentiment. And Step 3, turn those insights into action. Sounds big, but don't worry, I'll walk you through each step. Step 1 is data gathering. This is where the heavy lifting happens. You can't know what people are saying about a company unless you're collecting information from multiple places. Big investment firms pay for platforms like RepRisk, True Value Labs, or Sustainalytics. These softwares scan thousands of news articles, blogs, press releases, and even NGO reports every single day. But here's the good news. As a smaller investor, you don't need million-dollar tools. You can start with resources that are accessible, sometimes even free. For example, Google News Alerts let you track mentions of a company's name alongside words like pollution, lawsuit, or labor rights. Twitter, or X as it's now called, is another powerful source. Social chatter often reacts faster than official news. Even Reddit forums can be early signals if people are buzzing about scandals or praising a company's ethics. Step 2 is sentiment analysis. This is where AI steps in. Instead of you reading through every article or post, algorithms can scan and summarize the tone of all that chatter. The output is usually a sentiment score, positive, negative, or neutral. Some tools even chart how those scores change over time, so you can see if public opinion is improving or sliding downhill. Now, if you want to test this without spending a cent, there are free AI sentiment analysis tools online. You can paste in a headline, a tweet, or a snippet of text, and the AI will label it as positive, negative, or neutral. It's a great way to experiment and see how it works. But if you're serious, you might want to look at more robust tools. Platforms like Centify, Acern, or even paid versions of data platforms can process thousands of data points automatically and give you daily dashboards. Here's a practical tip. Don't just look at the score in isolation. Look for patterns. If a company's sentiment has been steadily positive for 6 months and suddenly drops sharply negative, that's a red flag worth investigating. On the flip side, if sentiment is climbing and staying strong, that might be an early sign the market is about to reward that company. Step 3 is taking action. This is where it all comes together. Remember, ESG sentiment is not about predicting every stock tick. It's about giving you an edge, a heads up, before the rest of the market reacts. So how do you use it? Let's say you notice a spike in negative sentiment around a company you own shares in. Maybe news breaks about poor labor practices. You might decide to dig deeper before holding or adding more. Or, if the risk looks serious, you might choose to trim your position. On the other hand, if you see positive momentum, like increasing praise for a company's clean energy strategy, that might be your cue to start building a position early, before Wall Street catches on. Here's the key takeaway. ESG sentiment investing works best when you combine it with traditional analysis. Don't abandon fundamentals like revenue, debt, or leadership quality. Instead, think of sentiment as another lens, one that captures real-time emotion and reputation. Used together, you can make more balanced and informed decisions. Now, I want to leave you with a story. A while back, there was a consumer brand facing backlash over plastic waste. At first, the stock didn't move much, but online sentiment turned sharply negative across multiple platforms. Within weeks, major news outlets picked it up, regulators stepped in, and the stock dropped significantly. Investors who were tracking sentiment saw the storm forming before the broader market reacted. That's the power of combining AI, data, and ESG awareness. It's not just about chasing returns, it's about protecting yourself from hidden risks and aligning your money with your values. So here's your action step for this week. Pick one company you're interested in. Set up a Google News alert for its name, plus the word ESG. Check out a free sentiment analysis tool and paste in a few headlines. See what you find. It's a small experiment, but it will help you start thinking in this new way. In our next episode, we'll go even deeper. I'll show you specific case studies of companies where ESG sentiment gave investors a clear warning or a clear opportunity. That way you can see the strategy in action. If you want to stay ahead of the curve, hit that subscribe button and join me in episode 3, where we'll turn these insights into real-world investing moves you can apply right away.